Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Netdragon Websoft Holdings Limited annual report. Netdragon Websoft Holdings Limited offers a diverse range of businesses and services across various platforms. At the core of its operations are online and mobile games that cater to different regions, including the People's Republic of China, the United States, the United Kingdom, and internationally. The company's portfolio includes a variety of games for kids such as Jumpstart, School of Dragons, Neopets, World of Madagascar, and Math Blaster. In addition to these kid-friendly options, Netdragon also offers other games like Udemons Online, Conquer Online, Way of the Five, and Adventure Navigation. Beyond game development, Netdragon engages in licensing and servicing developed games, allowing it to expand its reach and offerings. Furthermore, the company sells education hardware and software products, underscoring its commitment to providing comprehensive solutions for its customers. Overall, Netdragon Websoft Holdings Limited has established itself as a multifaceted player in the gaming and educational technology sectors, with a presence that spans across various regions and product categories. Netdragon Websoft Holdings Limited maintains a market capitalization of $5 billion, broadly in line with the industry peer group. Netdragon Websoft Holdings Limited trades at a higher price-to-earnings ratio of 28 times and a lower price-to-book ratio of 0.78 times relative within the industry. While the stock does not screen as absolutely cheap, mixed valuation signals relative to industry peers prevent a definitive conclusion. With the broader industry trading at lower valuation levels, this may reflect transitional pricing dynamics rather than clear mispricing, warranting further analysis of earnings quality, growth sustainability, and balance sheet strength. The company maintains a moderate leverage profile, with liabilities making up 44% of total assets, suggesting a balanced approach between risk management and capital efficiency. Liabilities have increased, while assets and equity have failed to keep pace or declined. This suggests the business is not growing and may be in decline, making it a highly unattractive investment from a risk perspective. Shareholder equity has weakened over the past 5 years, accompanied by declining or negative operating income. This suggests the business may be eroding shareholder value and warrants caution. The company has consistently reduced its share count, reflecting a shareholder-friendly approach to capital allocation. The company have a dividend yield of 11.01%. The income statement shows that the company revenue have been declining annually and operating income have not been increasing. This shows that the business is under pressure with rising cost and its management is unable to expand the business. The primary drivers of revenue growth or decline can be identified through a review of the key factors affecting the company's financial performance. Revenue decline is primarily driven by a decrease in gaming and application services business revenue, which decreased by 59% from 2024 to 2025. Additionally, the reduction in equity interests in several subsidiaries has also contributed to segmental revenue decline. On the other hand, revenue growth can be attributed to the success of certain. Udemons IP saw a significant increase in MAU growth at 11.1% YoY, while Conquer IP experienced 6.4% YoY revenue growth, with overseas markets accounting for nearly 70% of its revenue. Heroes Evolved IP also reported 21.3% YoY revenue growth, driven by content innovation and esports events. However, it's worth noting that not all business segments have seen growth. The Mindai segment actually saw a decline in revenue from 1932 million RMB in 2024 to 1,346 million RMB in 2025. The net income of a company experienced a significant decline, decreasing by 51.4% year-over-year. This substantial drop is a cause for concern, but it's essential to examine the underlying factors contributing to this change. A closer look at profit margins reveals a mixed picture. The gaming segment saw an increase in profit margins, rising by 3.9 percentage points to 27.4%. Additionally, the gross profit margin also experienced growth, increasing by 5.1 percentage points to 70.3%. However, the core segmental loss margin for Mindai business decreased, although the exact amount is not specified. The reasons behind these changes are multifaceted. One key factor is the reduction in operating expenses, which decreased by 22.2% year-over-year. Furthermore, the company's operating profit in the second half of the year increased by 47.7% year-over-year, indicating a positive trend. These factors suggest that while net income may have declined, there are signs of improvement in other areas of the business. The company's financial performance indicates a strong ability to generate cash from its core operations. According to various sections of the report, there is clear evidence that the company is producing positive operating cash flow. This is confirmed by two separate statements on pages 2 and 17, which explicitly state that the operating cash flow status is indeed positive. The performance of various segments and regions within the company has been mixed. On a positive note, gaming and application services have shown improvement, with revenue increasing despite an initial decline. In fact, by 2024, this segment's revenue had reached $34.25, indicating a significant recovery. In contrast, MindAI business and property development have struggled. The MindAI business saw its revenue plummet by 43.2% and gross profit decrease by 45.3%, resulting in a substantial loss of 441 million RMB in segment profit by 2025. Similarly, the property development segment has faced significant challenges, with revenue decreasing to just 2 in 2025 and a segment profit loss of 7 million RMB. Overall, while some segments have shown resilience, others continue to face difficulties, highlighting areas that require attention and improvement. The management of MindAI has outlined its vision for the company's future, emphasizing its ambition to become a global leader in artificial intelligence and gaming content, AIGC. To achieve this goal, they expect significant benefits from cost optimization by 2026. The company will continue to invest in cutting-edge technologies such as AI and augmented reality, AR, to stay ahead of the competition. In terms of financial commitments, management has pledged to distribute at least HKD 600 million to shareholders over the next 12 months. This move is part of their broader strategy to create lasting value for stakeholders. The company's AIGC capabilities have already started delivering results, with plans to increase AI-driven workload to 50% by 2026 through its AI plus gaming strategy. MindAI aims to leverage its AIGC expertise in mature fields while expanding into new genres with AI-native games. This will drive digital transformation of education globally and position the company for future success. Despite industry-wide challenges, management remains focused on cost optimization, product launches, and strategic collaborations to ensure the company's continued growth. The issuance of convertible and exchangeable bonds and warrants was a key strategic collaboration with an institutional investor in the education sector. This partnership will help drive MindAI's expansion into new markets and reinforce its position as a leader in AIGC. Overall, management's strategy is centered around innovation, cost optimization, and strategic partnerships to achieve long-term success. There is no notable activity to report on acquisitions and divestitures. The company has not engaged in any significant transactions involving the purchase of other businesses or assets, nor has it sold off any major divisions or subsidiaries. This suggests a stable and focused approach to business operations, with no major changes in its portfolio or structure. The company has demonstrated its commitment to returning value to shareholders through various means. Firstly, it has paid dividends in both Hong Kong dollars, HKD, and renminbi, RMB. In HKD, the dividend per ordinary share is a fixed amount of HK done. Meanwhile, in RMB, the company has declared significant dividend payments for 2024 and 2025, with a proposed final dividend of RMB 238 million in 2025. In addition to paying dividends, the company has also engaged in share buybacks. Specifically, it has confirmed that it made payments for the purchase of treasury shares in 2025, valued at -55 million. This indicates that the company is actively reducing its outstanding share count and potentially enhancing shareholder value through this strategy. That concludes the financial summary for Netdragon Websoft Holdings Limited. Feel free to comment below, and I will be happy to answer them when possible.